Welcome to our latest installment of ABL Advisors video series featuring thought leaders from the commercial finance industry. I'd like to welcome today's guest, Edward King, founder and managing partner of King Trade Capital. Thanks very much for being here today, Edward.
Michael, thanks. I enjoy being here and I look forward to the interview.
Thanks very much. We're looking forward to it as well. Today's interview is going to cover the topics of purchase order finance, the purchase order finance market, and the impact the supply chain disruptions have had on the commercial finance market. That is your area of expertise for certain. But before I get into that, I want to give you an opportunity just to tell our viewers a little bit about King Trade Capital.
Certainly. King Trade Capital is a company I started almost 30 years ago that provides small to medium-sized companies financing to help them fulfill contracts and orders that are larger than what their balance sheet or their traditional lender will allow. It's a sort of a unique style of financing that we sort of have crafted over many years, and it's a little bit more art than a science, and we take on the performance risk of our clients fulfilling orders.
Okay, great. Well, thank you for that. And with that, I'll start in with the first question, if that's okay with you. Small and mid-sized companies are often the first to feel the impact of any type of financial or economic crisis. Have you witnessed a destabilization of the supply chain because of the pandemic? And is that causing more small to mid-sized businesses to seek purchase order financing arrangements today? And then there's a second part to the question on that one, and that is, how would you describe the purchase order finance and supply chain environment in general?
Well, it's a good question. Certainly, small to mid-sized businesses are impacted by any disruption in the economy, and we have had a disruption in the economy unlike any we perhaps have seen since any of the world wars. Our client base, I mean, this year during the pandemic has seen a significant disruption in their supply chains, which started, candidly, it started early for those that were importing from Asia. When the virus was first hitting Asia, the worry predominantly was that people weren't going to be getting their supplies on time, and that the stores were going to either cancel their orders because they weren't able to bring in their goods timely enough. We all sort of, unfortunately, sort of missed the fact that these factories that were closing down in Asia, there was going to be this ripple effect that came across the ocean to the United States. And so in turn, what happened to a lot of these clients were goods got out of Asia late. They perhaps were able to get extensions on their orders. However, they had gaps in their cash flow and their earnings during these delays. The goods then arrive, we're financing them, we're paying for them. They land and the warehouses they're going to are closed. So the small to mid-sized guys and large companies as well, although we don't deal with them, had an enormous logistical dance trying to manage through this gap when retail stores were closing, warehouses were closing. I mean, we had clients that candidly had containers arrive and these containers just sat and they would get pulled off the port. They'd be sent to a warehouse. Well, the warehouse might be in Wisconsin for a big retail chain, but that retail chain had closed the warehouse. So the only thing you could do is just leave the container on the, sort of on the tarmac there. And so, yes, it has impacted them. We did have to deal very closely with our clients. And fortunately, we've got a good group of companies that we deal with that, they do, understand how to manage their businesses and stay in touch with their ultimate customers. But we were all in an environment during the pandemic that you just had to be patient and play it out and see how it was going to work out. I mean, we didn't exactly know how the supply chains were going to work and if people were going to get their goods into the States. And when they got to the States, there was no one to accept them and there were stores closed. So you had to, part of what we did is we supported our clients by allowing them to extend, their financings and not forcing any type of change. We were sort of all in the boat together, trying to figure out what was going to happen. Fortunately, stores started opening up. These customers or these clients started delivering to their customers, and then you had to work through extended terms. The customers, rather than paying in 30 days, they all decided to extend their terms because they didn't know how the sales were going to go. They didn't know if anybody was going to leave their house to come buy things, and so there was a big learning curve. And in our business, we're used to things unraveling, and as long as you understand them, well, I should say we're not used to them unraveling, but we do see things that don't always work, and you just try to assess in real time how to make the best decisions in order to accommodate your clients so that they can keep their customers happy. Sometimes you just have smaller deliveries. Sometimes you hold back inventory and store it and then, let it trickle out. So, but it certainly affected these clients. But we chose to support them by giving them much more lenient manners to get us paid back. We were very patient when goods remained in warehouses and didn't go to the customers. And fortunately, because of that, most of our clients worked through it and made their sales, made their returns on their delivered goods, and now we're working into the next phase of the pandemic. So some of it remains to be seen.
Okay, great. Yeah, well, that's where the experience comes in, that you can take it even a more patient approach to it as well. Now, the government stimulus packages such as the CARES Act and the resulting Paycheck Protection Program more than likely positively impacted many companies out there, but did it positively or negatively impact the need for purchase order financing, since so many small to mid-sized companies were provided much needed injections of liquidity during that time? What kind of an impact did that have on the market for you?
Well, for us, I think it helped. It certainly helped. Unequivocally, I think it helped a lot of companies. Our clients tend to be of a scale where it's helpful, but they're bigger businesses with bigger needs to buy goods. So the size of their need to buy goods sort of outstrips what they were going to be getting from the government. Not to say that there aren't some that benefited greater than we know, but we saw a reasonably consistent need for capital initially. I would say the biggest impact to our business was really back to the supply chain. It didn't really normalize completely, and there was still a lot of factories that were being impacted and components that go into things that a lot of production was delayed. And in some of our clients' cases, it was helpful because the orders were slowing down. I mean, here in the U.S., the buyers weren't buying, and even with the PPE keeping them operating, keeping their employees on the payroll, I would say a lot of our small to medium-sized companies, the book of business that they do, whether they were selling cell phones or clothing or car tires, that business dried up, and we watched a great deal of them pivot to do something else. Most of them got into, honestly, we saw a lot of clients pivot into selling PPE and, masks and gloves and gowns, like no other time. During this pandemic, there was almost the entire economy that related to anybody does trade cross border, which we do significant amounts. It pivoted to PPE in a significant way. So if you were a ladies' dress manufacturer, like we have some fantastic companies and families that have had generational businesses that we finance, they struggled through the deliveries to their big box retailers and worked through that inventory, got it in, and then their entire business model switched to trying to get medical gowns into the United States for hospitals, masks to hospitals. We saw an awful lot of our clients pivot. We've certainly provided a fair amount of purchase order financing for those clients that pivoted. We've seen a lot of other small to mid-sized businesses that pivoted to do the same thing that were brand new. And I'd say during the pandemic, our business, from the business development side of things, we've never had a rush like we did for capital over, really starting in February. And it is moderated by now, but it was unlike anything I've ever seen. We had our entire team was working remotely, and I would say everybody was working sort of 7 days a week, long days, because everybody was calling at all hours. And I got to credit the entrepreneurial spirit in our country. There were certainly a lot of people pivoting to help.
Yeah, it's good to hear that, especially when we hear about all this in the news about companies that have pivoted that way, as you said, and to actually you've experienced it yourself, and it actually created new opportunities for you to help these companies rather than just stay by the wayside and wait for things to happen. A purchase order finance solution provider is willing to take the full risk of delivery, like yourself, including the risk of cancellation of the contract itself. Has the current environment changed your approach within this specialized form of lending? And to clarify that, I mean, for lack of a better way of saying it, are you buttoning up your transactions differently than you used to prior to the pandemic because of what's happening? Is your underwriting changed in any way?
Well, I would say that historically we've really stuck to some fundamental basics. And although we're a very entrepreneurial lender and we don't have a finite box, there are sort of tried and true ways of structuring for success in purchase order and supply chain finance. We became more entrepreneurial and did take on some additional, what we would consider incremental risk, but we didn't do it in a outlandish fashion. We did it in a very thought out, educated manner that sort of stuck with sort of all the experience we've gained over our 30 years.
One of the benefits of purchase order finance is that it provides a complementary relationship between the traditional lender and their customers by providing the liquidity to the borrower without the lender needing to take on additional risk. Have you seen more activity coming from lenders that you've worked with because of this? Are they turning to you for more help with their clients?
Yes, they are. I mean, we've been very fortunate that over the years we've worked in conjunction with a lot of banks, asset-based lenders, and factors that we know or know us, and we've been living in what I'd call a hyper cycle of of liquidity. There's been an awful lot of money out there. And so the competition to finance companies has prior to the pandemic, I think people become very aggressive in deploying capital, and sometimes they weren't financing in environments they understood as well. So when the pandemic hit, we saw an enormous contraction of risk. Banks and asset-based lenders and factors, rightfully so, were getting back to basics. And so we did get a lot of phone calls on purchase order scenarios where we would provide the inventory side of the financing or the pre-delivery financing, because most of these lenders, rightfully so, understood there was an enormous risk that was hitting the economy, and none of us understood how it was going to play out. But the nice part of working in conjunction with a purchase order finance source is we handle these shipments of goods and understand what's going on in real time. We know where the goods are. We know, the deliveries are being made or not made, and can monitor, quote unquote, the collateral in real time, whereas a more traditional lender doesn't have the ability to track that. And so, our cooperative working in conjunction with other lenders over the years has always been a value add for not only the other lenders, but also the client, because we will provide additional liquidity that the other lenders often are not comfortable with. And it certainly happens when there's an economic downturn, in this instance, a pandemic, which caused an economic downturn. We've done an awful lot more business with our friends in the asset-based world and the banking world. So it's been, I guess, a net addition for us, and it's allowed the senior lenders to maintain their relationships with their customers and help them get through what's an unprecedented time.
My last question is how you foresee what's going to be happening in the supply chain. There's been a lot of interruptions. Things have calmed down a bit, but there still are. How do you see this playing out in the coming months and as we go into 2021 from the supply chain side?
Well, the supply chain going forward, it is certainly a concern, and it has been a focus. We have our weekly meetings, and with my team, and we talk about it every week because we're exposed months out on production or deliveries or cross-border trade, and candidly, there's things we look at and we're trying to assess something we don't really know, but we're trying to look out into the wintertime, candidly, right now. And as we recognize right now, there's spikes in the virus, and you sort of have to read the tea leaves. You sort of have to make your best guesstimate of how the country is going to react, and are you going to be able to bring goods and store them? Our warehouse is going to be open, our store is going to be open, and our general view is perhaps we will slow down a bit, but I don't think that stores will close like they did. Our sense is, if there's a bad area, the stores now are more adept at, for instance, curbside delivery, so that perhaps the sales will keep going. The online sales have continued on for stores that didn't do a lot of online sales. So I think for the most part, there'll be, the economy and sales will continue. They might slow, they might dip, but I don't foresee that we'll be closing down sort of across the board like we did.
Yeah, well, there's a lot of new things in the bucket right now that you have to watch, and that's for sure. And with that, unless I've missed anything that you wanted to cover today, I'd like to wrap it up and thank you for your time today, Edward. It's been interesting to hear your view of what's happening in the supply chain, how purchase order finance has been impacted, the relationship with lenders and your customers, and how customers have pivoted. We covered quite a bit today. So thank you very much for your time today. It's been a pleasure. And I hope that you and your family and everyone on your team stays safe. And thanks again.
Thank you. I enjoyed it and appreciate the ask.